Hi, this is Zach here from Zach's Traders Cafe with a look at the major markets on Friday, the 29th of July. Starting off with the FTSE 100, and still a bit grey as far as exactly what trajectory this market is within or what lines are governing the price action. But best call at the moment is probably that we've got a June uptrend line running through 66.52, which is the 20-day moving average, and the upper parallel up towards the 7,000 level. The ideal scenario is that we don't really have any price action but below the 10-day moving average at 67.20, but we'll have to allow enough wiggle room down to the 20-day line at 66.52, but still giving the benefit of the doubt to the upside argument, at least for now. Onto the DAX, and intriguing here that we had for the main session quite a strong sell signal in the form of this key reversal to the downside and the gap fill at 10.275. Will be interesting to see whether that progresses for Friday's session. Otherwise, probably one will be looking towards 10,400 as the top of the range, as it has been since April. Onto the US markets, and Dow looking a little bit more out of sorts than it has done for a while, but nevertheless we've got this gap, a gap to the upside, which was filled at 18,390. While we're above that on an end of day close basis, and especially while we're above the 20-day moving average at 18,316, one would give the benefit of the doubt to the upside argument, but cautious traders might want to see a clearance of the 10-day line at 18,518 before going long again and targeting the near-term target of 18,800, which is the March resistance line projection. Onto the S&P, and here it's a case of almost flat action really, either side of the 10-day moving average, 2170 at the moment. Best way forward here is probably to regard this market as an ongoing buy up to 2220, which is the March resistance line, while there's no break back below the 20-day moving average at 2145. For the Nasdaq, we've seen the breakout here over recent sessions. That continues apace. 4740 was the suggested target zone, which is effectively former November-December resistance, and we're just moving up to that now. That target's valid while there's no end-of-day close back below the 10-day moving average at 46.54. We might start opening up the idea of a March resistance line projection target up to 48.20, but maybe early days. Let's just see how this target around 47.40 pans out over the next few sessions. For the cable and the currencies, interesting that we're still milling around in this range, basically 131 to 132.50. Probably not really worth taking much action unless we see either sub 130.50 or above 133 at this stage. So rather sidelined. RSI at 43, which is a negative on the price action, but clearly not much is going to happen until we see what the Bank of England's going to do next week. Onto euro dollar, and here it's a case of trying to see whether there's any follow through on this upside attempt above the 200-day moving average at 110.90. So far, not looking very convincing, but it's early days yet. Might still be able to get a spike towards the 50-day moving average at 111.53, even if this market then breaks down after that. For dollar yen, that's where all the news is. Disappointment with the Bank of Japan, which is not really surprising given that they have basically already used all their conventional firepower. Previous suggestion was that we could wait for a break either above 107.50 or back below the 20-day moving average at 104.24. We've had the break to the downside, and while there's no end-of-day close back above the 20-day line, the risk is now of a retest of the 100 yen level. Finishing off with gold, and a decent revival here in the wake of the FOMC, but not too much more than just reasserting the recent range, let's say 1310 to 1350. We'd like to see really an end of week close back above 1350 to suggest that the top of channel target now up to 1450 is on its way over the next month. RSI 56, so looking very much in the box seat as far as that indicator is concerned for buying weakness at the moment. Only back below 1305, that last June support, really an outright negative for this market at this stage. That's it for me. More updates at the same time on Monday.